Today is Tuesday, June 3rd, 2026. Qualcomm fell 9.5% in a single session, not because of bad earnings, not because of weak results, but because Nvidia just entered its market. We break down exactly what happened and what it means on the chart right after the global recap. Monday's closing data. In Asia, Japan's Nikkei gained 0.91% to 66,934. Hong Kong's Hang Seng edged up 0.86%. Shanghai dipped 0.27%. In Europe, markets were broadly flat. Germany's DAX was nearly unchanged. France's CAC dipped 0.09%. London's FTSE slipped 0.26% to 10,382. In the U.S., the Nasdaq crossed 27,000 for the first time in history, closing at 27,086, up 0.42%, a new all-time record. The S&P 500 also hit a new high, gaining 0.26% to 7,599. The Dow added 0.09% to 51,078. The main story was Nvidia. It unveiled a new artificial intelligence chip for consumer personal computers, and the winners and losers in the chip sector were dramatic. Three confirmed events driving markets today. First, Nvidia unveiled the RTX Spark AI chip at Computex in Taiwan on Monday, developed in collaboration with Microsoft and built on ARM architecture. The chip brings artificial intelligence to consumer personal computers for the first time. Dell and HP will manufacture devices using the new chip. Nvidia surged more than 6%. ARM Holdings, whose architecture powers the chip, surged 14.5%. Dell gained more than 10%. HP gained 8%. The losers, companies whose PC chips are now being displaced. Qualcomm fell 9.5%. Intel fell 4%. AMD fell 4%. Second, Broadcom reports Q2 FY 2026 earnings tonight after the close. Broadcom makes custom artificial intelligence chips for Google, Meta, and Apple. Given that Dell just showed AI server demand growing 757%, the bar for Broadcom is very high. Third, non-farm payrolls dropped this Friday, the key jobs data for June. Now let's dive to most interesting part of the day, Qualcomm, ticker QCOM. This company makes the Snapdragon chips that power most of the world's Android smartphones, as well as a growing number of artificial intelligence personal computers. On Monday, the stock closed at $228.99, down 9.5% in a single session. The two-year chart tells the full story. The stock was trading around $121.99 at its 52-week low in April and had surged all the way up to a 52-week high of $259.92. That is a gain of more than 100% in 6 weeks. Looking at the moving averages, all five are below the current price. The EMA 20 at $212.93 is the nearest dynamic support. Below that, the EMA 40 at $190.60, the MA 50 at $167, the MA 150 at $162, and the MA 200 at $162.82. Despite the 9.5% drop on Monday, price is still comfortably above all five moving averages. The bull trend structure is still solid intact. Now here is what every trader needs to understand about this chart. The RSI is at 59.41. That means the stock is in the healthy zone, not overbought, not oversold. Despite the large single-day drop, the RSI has not yet reached the 30 level that would signal an oversold condition and a potential bounce. There is still room for the stock to fall further before a technical bounce signal appears. The Williams percent R at minus 44.89 is in the neutral zone, the same message. And the MACD histogram at 0.88 is almost zero. Momentum has essentially stalled. Here is the key lesson. Not every drop is a buying opportunity. A 9.5% fall sounds dramatic, and it is. But the question is not whether the drop was large. The question is whether the fundamental reason for the drop is temporary or permanent. NVIDIA has now entered the personal computer chip market that Qualcomm was positioning itself to lead. That is a structural competitive threat, not a one-day event. The smart approach is to watch the EMA 20 at $212.93 as the first support floor. If the stock continues to fall and the RSI approaches 30, that is where a technical bounce becomes more likely. Also note, Qualcomm has announced a cash dividend of 92 cents per share with an ex-dividend date of June 4th, that is tomorrow. Shareholders on record before tomorrow will receive that dividend. 3 things to watch today. 1. Qualcomm at $228, RSI at 59, not yet oversold. All 5 MEAs still below price, trend intact. Support, EMA 20 at 212. NVIDIA has entered its PC chip market. This is a structural threat, not a one-day event. Watch carefully. 2. Broadcom tonight, the most important earnings remaining this week. Custom AI chips for Google, Meta, and Apple. If it beats, the AI rally continues. If it misses, the entire sector faces a correction. 3. Non-farm payrolls on Friday, the Fed's most important jobs indicator. Strong jobs plus high inflation equals no rate cuts. A weak number could bring rate cut hopes back. Stay disciplined. That is your Global Market Pulse Daily for Tuesday, June 3rd. Subscribe for tomorrow's Broadcom reaction, posted every morning at 7 a.m. Eastern. Happy trading.